The Orange County real estate market just keeps doing its own thing. I mean, nationally, things aren't exactly on fire. Inventory is starting to accumulate and buyers are starting to step back. And Orange County just keeps saying, "You can't hold me back.
I'm a peacock. You gotta let me fly."
Welcome to the Orange County Weekly Trend Forecast. I'm Nathan Necochea, your Orange County Realtor. Real quick, before we jump in though, let's say a quick thanks to Altos Research for doing the heavy lifting here, and don't forget to like, comment, and subscribe. Now let's talk about it. Starting off with the Market Action Index to get a sense of the overall market, Orange County is sitting with an MAI of 47 for the second week in a row. So, we're continuing that trend of being in a strong seller's market, which, after looking at the data, could continue through the rest of the year. That unless we start to see some signs of a slowdown. Now let's move on to the median price of new listings. This is an interesting metric to watch because it can kind of be a crystal ball for what's to come. When a seller prices their home, they're taking into account the current market dynamic. So if we see the median price of new listings starting to trend upward, we can expect to see the median list price go up about 30 days later, and sale prices to go up 30 to 90 days after that, generally speaking anyway. This week, Orange County's median price of new listings was up about $100,000 to $1,499,400. That's going to be the highest point since early August, and then before that, the beginning of the year. Now, I don't think it necessarily means prices are drastically on the rise, but it is a good metric to watch. Really, I think it's more a sign of stability in our pricing. Median new list prices tend to fluctuate weekly, kind of around that $1.4 million mark, while the median list price has been pretty flat overall. So while we're seeing some increase in values, it has been pretty slow. Now let's dive into the wonderful world of the percentage of price decreases and increases. Yay. Now, neither of these data points stand out. 33% of listings saw price decreases, which is about as vanilla as you can expect. It's plain, normal, and nothing to write home about. Unless you just really like stability. As long as we hang out between that 30 to 35%, we don't expect there to be a big dip in demand, which would be represented by a percentage at 40 or above, and that would bring prices down. The good thing for buyers is that the 30 to 35% means that demand isn't overwhelming and competition between buyers isn't too cutthroat. The percentage of homes with price increases is up a tremendous 0.15%. Yeah, up 0.15, and we're still sitting at the 2% for the 9th week in a row. Normally, we do expect to see this number under 5%, so yet again, Orange County is delivering what's normal. What that 2% actually means is that demand is sufficient at current pricing for the inventory. So buyers shouldn't expect to see a big jump in home prices, and maybe more importantly, it means overpriced homes will stand out as being overpriced. Sellers, none of this means you can't ask a little higher up the value range for your home if it's justified. What it means is that your asking price shouldn't be too ambitious. Increases in pricing will probably continue to be gradual, so sellers just price it right. Remember, the best way to get over asking price is for buyers to compete. The more eyes that see your home, the more opportunities you have to sell. Pricing too high is going to have a negative effect on buyer interest and your time on market. Now, on to the percentage of homes that were relisted. Not to be the metric to buck the trends, homes relisted stayed at 10%. As a quick refresher, this percentage refers to homes that were on the market, either didn't sell, fell out of escrow, or just left the market for some other random reason, and then came back on.
I'm back!
And finally, on to inventory and the market segments. At the end of last week, Orange County had 2,347 homes available for sale. Shockingly, this was an increase of 9 homes for all of Orange County. But we're still only at about 2/3 of the housing supply we saw prior to 2020. At this point, any increase is good, but it's just not enough to keep up with demand. And breaking it down by market segment kind of tells the story. The The bottom market segment saw 98 homes come on the market, while 122 were absorbed. The lower market segment saw 78 new listings with 109 absorbed. The upper market segment had an additional 52 homes added to the market and 82 absorbed, while the top market segment actually saw more homes added than lost. We saw 34 new listings versus only 26 sold. So we can see that demand in Orange County is still outpacing supply. This isn't going to necessarily be the case in every OC city or neighborhood. Comment below any city you're interested in seeing the data for. I'll be happy to share that and maybe add it to the WTF series. While Orange County is still in a technical seller's market, the overall dynamics aren't terrible for buyers. There are plenty of opportunities to find the right home, but be aware there will be competition for the best homes in each market segment. But if you're watching this as a potential buyer or seller, you're putting yourself in a strong position to spot opportunities and to understand where the market might be headed and why. National data is good to know, but real estate is local and you can't negotiate in Orange County based on what's happening in West Virginia. If you have any questions, I'm always happy to help, and you can always find my contact information in the description. So there you have it. Don't forget to like, comment, and subscribe. Thanks for watching. Until next time.